About the oil price shock that you mentioned, because I've seen two arguments really emerge on Wall Street. One, if we have a sustained increase in oil, like you were alluding to, we could see this upward pressure of inflation that could trickle through into gas prices, which we know have been pretty stable.
Yeah.
That's been helping the consumer right now. On the opposite side of that, that could also dent growth, which could lead to maybe a deceleration of the labor market, and then that would force the Fed to act more quickly and cut rates. How are you viewing that?
Yeah, I mean, you tend to see in history the latter happen, where yes, even if you do get a little bit of a spike, sometimes that spike is, whether it's driven by oil or not, it's consistent with a broader pressure point that's hitting the economy. So even if you get a spike, oil prices tend to roll over after, along with growth. But I think the big caveat today is that oil prices were already pretty low. The global supply environment is more favorable for downward price pressure as opposed to upward price pressure. And even in periods when you did have a more sustained increase, like 2022, when Russia invaded Ukraine, oil prices were at a higher level.